Hey everyone, it's Ed Kime from over at Quantcha, and welcome back to another Quantcha Challenge Day. Just a quick reminder that we have an unlimited commission-free stock and option trading offer for $99 a month, where you get the entirety of everything we have to offer in Quantcha and our web tools, as well as really commission-free trading from your Tradier brokerage account. Check it out at Quantcha.com if you're interested. And it's actually what we're using here for the Quantcha Challenge, which is why we're able to place so many trades that we do without worrying too much about how much commission is going to eat into them or impact our probability of profit. So, want to before we dig into the portfolio and any adjustments that we're going to make today, wanted to talk about some of the early feedback we got from last week. We completed our first few days of the Quantcha Challenge. Overall, the feedback was completely positive, which I loved. It was also very helpful. People were saying that a few folks I talked to said that we should keep streaming the live videos daily, which seems pretty easy. Also, that the plan we have right now is to stream one video per day. So we're not planning on jumping in and out all the time. I think we're just going to have that one video come on, even if we're not trading, even if we're just coming to take a look at the portfolio. I do research ahead of time and try to figure out like if there's specific trades we want to get into or different features we want to show. But we're not going to trade every day. We're not going to trade for the sake of trading, but we will try to show a good variety of stuff. So do plan on that. The other thing we got was a request to keep the time more consistent. This makes a lot of sense. I know that a lot of the folks that we have using Quantcha have day jobs, and maybe you can sneak off for a half hour or whatever to watch some videos, or maybe you can have that stuff going on during the day. But if we had a specific time, it would be a lot easier for people to tune in. I don't know if we're going to get to that, but generally we're going to try to start between 2 and 3 Eastern, and hopefully keep it, under half an hour. Generally, probably much less than that. But the plan right now is we'll probably try to start between 2 and 3. But if you subscribe on YouTube and you click the notification button, they'll let you know through pretty much every channel. I mean, when we start streaming, I get an email, I get an Apple Watch notification, I get stuff popping up all over the place, and hopefully that's helpful for everybody. So now let's dig into the portfolio. This is where we are right now. Last week we opened 4 positions. We're bullish on 2 of them. We're bearish on 2 of them. We've got different times to expiration. Just a quick review. Carnival, we are bullish on. We've got a credit put spread that's out for still about 5 weeks out. It's going in our favor. It was up a little earlier today. Right now, we're actually up on the trade. This is mostly liquidity cost. I mean, that's a pretty insignificant amount of money to be down at this point. If we were to close this, we would get, if we got at midpoint, we would make money on the trade. But we have plenty of time left. We've got this Microsoft trade. Microsoft continues to move against us. Every day it's dropped since we opened the trade, but that's going to happen. This is really more about the long term, so I'm not too worried about what's going to happen with Microsoft. I am looking at potentially rolling this option in. I mean, we've got 5 days left, and there's about a 10%. One of the things to point out too is we show the days to expiration for each option as well as the likelihood of the option being expired. For most of these, it's just the likelihood of moneyness at expiration, but if they are issuing a dividend, it does also factor in the probability of early exercise. So you will get some warnings. Now, if it's just letting you know if like you're less than 10%, I don't think we show anything here as a warning. But we have a moderate risk of in the money. So, I think it's greater than 10% considered to be a moderate risk. It's still possible Microsoft will recover a few percent to break that 105. And again, this is all based on the implied volatility and the expected move that's derived from that and so on. For these Starbucks options, you notice they're both red because they have a high probability of being in the money for exercise either at or before expiration. We're not worried about the dividend because we can see that's further out, but it is something to be concerned about. Starbucks was actually a trade that really turned on us pretty quick. Just to talk about this was something we opened on Friday, and the idea behind the trade was simply what we wanted to do was we wanted to get in on a stock that we expected to see get down a little bit over the course of the week. We're expecting them to disclose some bad China news based on a bunch of reports and Goldman's downgrade last Friday. But what happened was, it's actually kind of messy, was for us, if I kind of pull back a little bit, we sold the trade around here, and as you can see, they caught the bid at the end of the day, so they closed up significantly. We got lucky again this morning. They were around 63 in the morning, which was kind of where we expected them to be, here or below, and then they caught another one, and they've been kind of trending downward. But we'll see what happens there. And of course, we've got our Exxon Mobil positions. That's another bearish trade, and I'm still pretty bearish on them. It's about 4 weeks out for that one, and we will get to it when the Exxon Mobil trade. Actually, go right to the books. Probably a better idea. Is This is a trade out. As you can see, it expires on the 1st, so we've still got 2.5 weeks left. Right now, we're in the middle. We're between our strikes. It has been trending downward, fortunately, in the direction we had hoped for. So the expectation is hopefully we can get down below here. Another important thing from the portfolio is that we're trying to keep ourselves neutral on our beta weighted delta. And so the that's just to say that we don't want to have a significant impact from the we don't want to be significantly impacted by any movement in the S&P itself. So in this case, if we come to show our Greeks, we can see that we're at about 12 for our beta weighted delta. That's not too bad. It just means that if the market drops if the S&P drops by $1 or SPY, we should expect to see about this much drop in our overall portfolio value. So we're pretty close to zero on that. We're not out of range. We've got 2 bearish trades, 2 bullish trades. They've done a good job. One of the things I was thinking about doing, though, is I thought it might be pretty cool to trade some earnings, and there's a few ways to do that. One of the ways to trade earnings is I wanted to show using our let me see what we have here. Going to our screener, we've got a stock screener here that is great for any kind of option trading to filter down, all the stuff for the stocks and so on. The details, we've got a lot of option specific metrics here. The thing we'll look at here is one of the trades I like to do is pre-earning straddles. And so this is where we open a straddle position for a stock that has, we think, relatively low implied volatility, and then we try to hold on to it up through really the day before earnings or the day of earnings, and then sell it off. So if I replace and say I just want to see stocks that are reporting earnings 5 to 6 trading days out, and there's a bunch of them, and then we're going to try to improve the liquidity, be at least good. See what we get here. And there's a few here. The one that caught my eye earlier in the day, because it has the weekly options we really want, since we're looking at next week's trading, is Johnson & Johnson. And their implied volatilities right now for the 30-day is only 21.5, which is really low. The IV rank and the IV rating, these are all 30-day measurements. This is all pretty low when you think about the fact that they have earnings coming up next week. So what we're going to do is we'll take a look at the stock itself, and we can see that earnings is here. Volatility peaks next week at under 25, which is pretty low. Pretty low relative just to the rest of it. It's just kind of a stock nobody really expects to move at all, but that also should give us an opportunity to potentially buy it for relatively low time value and then hold it up until the earnings, up until prior to earnings. So I'm just going to go to the option chain. Right now they're trading at 128.50, so or 128.40. So let's just say we go for the maybe what we'll do is we'll just go for the straddle right here. If we go for the straddle, that is a little bit in the money on the call side. Now this trade the skew is pretty evenly balanced right now. It looks like just from the fact that one of the things we have here is we're able to have a virtually break-even trade, or at least the probability is about break-even for this, considering going to earnings and stuff. So the pricing, I think, isn't too bad. We'll model it in our book. At this point, though, we don't really have any positions here, so there's actually no point in really even modeling it in the book, because we don't have anything to compare it with. But let's just go ahead and we'll throw it at a trade ticket. I like this. I like this particular trade. Now, again, we're putting $500 in risk behind it, but let me see if we can pull in for a slightly better trade. We're modeling about $500 in risk behind it, but we don't expect to hold it to go down to zero. And the odds of it going to zero are virtually impossible, because it would have to land at expiration at that 128 mark, just because of the way straddles work. So I'm going to try to just inch our way in real quick to see if we can close that. Actually, I was too aggressive on that. Let's go to 460. See if we can close it. And if not, we'll notch it up a little bit more. We'll give it a few seconds here. Go up to 465. We'll take a look there. So we'll let this sit for a little bit. Now, as that order's getting as that order's hanging out there, what we're going to do is we're going to go over to the book again while that waits. Let's take a look at the book with that trade in it. I think we've got that trade positioned here. Now, what we're really thinking about doing here is we're just going to go to the day before earnings. Now, earnings is expected on the 22nd, so we'll go out and we'll say we're going to hold it till it's before market open. So we're really going to hold it to the 21st. Here we go. Or rather, the 21st is not a market day. So we're really closing that out. If they're announcing before market, this is a mistake on my part. I forgot that the 21st is not a market day. So we're really looking to close this out. What would be this Friday? So we're only holding it for a few days. Now, if it doesn't move at all and it just sits there, I mean, we're looking at a loss there of about $92. So at that point, we'd lose about 20% of the investment that we've made here. But if we can get any movement in either direction, or we can get this volatility to rise a little bit going into earnings, which I think it probably will, then we'll be able to make a profit on it, or at least lose less. I mean, part of the goal here is to get a little bit of edge, because the ordinary theta decay that you get on options doesn't react the way you'd expect it to generally going into an earnings, because there's more demand to buy options. And so that as that demand increases leading up to the day of option expiration, or in this case the big event being the earnings announcement, what you end up seeing is that the implied volatility will go up to match the fact that there's increased long demand. So anyway, we'll just jump back out for a second. I see we haven't quite closed in on this. We'll give it a little bit more. No need to hang out too much, and I'm just going to chase this in penny by penny until we can get it closed. There we go. We got it at midpoint, not too bad. We'll take a look at our portfolio now. Now we're looking at, we've got that J&J position. It is expiring next week, so we've got 11 days until expiration. The rest of the book looks pretty good right now. We are down. A bunch of this is liquidity. Like, this trade is positive. This trade is probably positive at midpoint. The Starbucks trade is the one that really worries me, because we opened it on such a short time frame that it only has this week, and right now it's hanging out just around our hedge strike, so the long strike we have in the call spread. The early expiration is unlikely to happen, but I think if we don't see another down day tomorrow, we might just close it out and hedge out might just take the loss we took. Excuse me. So we might just take the loss that we've got so far and move on. But we'll see. I mean, the big thing right now that's giving us is a big, nice negative delta to keep us more balanced. But tomorrow we'll get into some more stuff. I think we're going to see continued movement and hopefully get some more. Carnival was up. It was actually up. I wanted to show this earlier. We were up almost all day, and then right before we started recording, it went down below the line. I think Carnival is going to continue to trend upward. It's been doing pretty well for us, and I like the prospects of it over the next month. But if you have any ideas as well, the other thing we're open to is if you are looking to trade specific views on stocks, like directional views, or if you're looking to play volatility views, let us know. Give us some feedback. Either hit us up at hello@quantcha.com or leave a comment below, because we're going to try to incorporate those community trade ideas and so forth. I know it's kind of tough because it's hard for people to get in here during the market day to stream live, but if you do check it out and leave a comment afterwards is fine, or like I said, email us. In the meantime, I'm going to sign off to keep this brief, and as always, good luck and good hunting.